Good morning, everyone. So it's finally Friday. I hope you had a good week. I didn't. I blew a couple of accounts. Unfortunately, this is what it is. I'm lacking discipline and need to work on that. Although I am pretty good at reading the market, I suck at being disciplined. So, looking at Nasdaq, what did Nasdaq do this week? So our previous week range was this one. So in hindsight, the price action was not bad at all, with the exception of the fact that it was spiky as hell here. And so throughout the current week, we've got up, down, up, down, up, down intraday. However, on the higher time frame, if you look at the 4 hour, it was pretty easy to read. So we have previous week where, check this out, easy price came back down into discount, reacted from bullish order flow into the discount of the range. So normally next target is the draw on liquidity is the high here, and this is Monday, right? So it's easy to understand. Monday price went from internal range liquidity here. We have had internal range liquidity. Price reacted from this, going to external range liquidity. External range liquidity. So this is what price has been doing since Monday, coming back to the external range liquidity. Now that happened yesterday when price 2 has taken the ERL and normally came down back into internal range liquidity, still pretty much very bullish. No matter Musk and Trump are fighting, blah blah blah, that doesn't mean shit. The market would have moved either way for one reason or another. So price comes down back down into internal range liquidity, which is this breaker. So this entire structure is a breaker. Here, this price comes down into this and going back up to external range liquidity. Now let me delete this range because this is spent, right? So last week's range has done its job. Let's go to a new range because we have a new high. Where was the move that created this new high started? So the move that created this new high started here with displacement, right? So this is our new range. There it is. Price moves up, external range liquidity, 50% of the range into the discount, and continues this move up. Our new draw on liquidity is this one. ERL, external range liquidity. Simple stuff. There we go. Now, we can go to a 15-minute. On the 15-minute, we know that we have a overall bullish bias, right? Let me delete this. Bullish bias, but this is my range in the impulse range. This is the 15 minute range. This would be the impulse. So now for this morning because it's 26 minutes past 1 during New York AM cycle. Now I'm waiting for I'm looking for the price to possibly trade into 50% of the range here, and that's it. This is the move. We do have equal highs here, right? Price could very well have this as drawn liquidity. So this would be a target. Price could do something like this. Come back down, come back up into this imbalance, 50% of the range, takes the equal highs there into that bearish fair value gap, comes back down into discount. So somewhere in this move, I may take a trade, right? Alternately, we could see price doing something like this. So price comes into this imbalance and comes back down into 50% of the range and comes back down, inverts fair value gaps, bullish fair value gaps here get inverted, and we see price continuing down, right? That could very well be. Could very well be. But even the fact that higher time frame is bullish, the immediate move is this one, 50% of the range here. Let's see what happens. Let's have a look at ES as well. If I go to ES, I was looking to see if ES created any SMT. Wait, thank you. YM is shit. Let's not look at YM. Yeah. So yeah, that's it. Trade safe. Have a good weekend and see you on Monday.